Let's take a look at how markets in Namibia have performed for the day. Looking at that overall index, down 1.2%, 980 points. And just checking in on the local index there, 280 points, sitting pretty much flat, slightly to the good. We know that some resource counters have been under pressure, and that's why the overall market is slipping back on the day. Just looking at how the currency is faring right now, 8.9 against the US dollar. Well, let's cross over to our studios at NBC in Windhoek. James Cumming, CFA at Simonis Storm Securities, is standing by. James, thanks for joining us today. So looking at the manufacturing sentiment index, the first time in fact you've released this, registering 29.93 in quarter four, and that's said to be an improvement. So let's just take a look at quarter four and really what are the factors driving the higher level there.
Thank you for having me, first of all. Yes, as you mentioned, this is the first time that we've calculated the sentiment index, and it's based on a number of questions that we've sent out to the manufacturers in Namibia. The quarter 4 2012 numbers, as you mentioned, ended at 29.9, and that is an improvement over the year. At the beginning of 2012, it registered 25, and we found that that was mainly driven by manufacturers who have found that their order books have improved over the year, and also that their levels of production have improved. Mm-hmm. And the index is broken down into a present situation index and a forward-looking index, just depending on the type of questions. And we found that the present situation, the manufacturers are still that's still in negative territory, but it has improved over the last quarter. Mm-hmm. However, the forward-looking index has, although it's very high positive number, it has decreased slightly over the quarter.
So just looking at the average capacity utilization rate, sitting at 71%, and that's from 74%. So that's fallen back, and that, of course, a negative there. But what do you say accounts for the reason that's fallen back? And given the fact that manufacturers are feeling particularly bullish right now in the future, unlikely that that's going to increase anytime soon.
Yes, that's it's a bit of a contradiction. A lot of manufacturers found that their order books had increased mm-hmm. over the quarter, but utilization had decreased. So it could be extra capacity that the manufacturers have factored into their processes. But we've also found that manufacturers find that there's a shortage of skilled labor, mm-hmm. and the uncertain economic environment is hampering their progress.
Mm-hmm. And also pointing out imports, of course, competing for local market share. Is that a growing issue in Namibia right now? Imports coming into the economy, and of course taking away business and jobs perhaps from the local manufacturing sector?
Yes, that is a concern. It always has been, and it will always be. Mm-hmm. But I think the rand or the Namibia dollar US dollar exchange rates will help that, which has caused the imported goods to be more expensive in Namibia.
Mm-hmm. Let's just look at the private sector credit extension figures coming through. Looking at growth there of 16.96% year on year. That's for the month of December. And looking at that relative to November, it's come down from around 18.5%. But still that level would be considered high. I mean, it's almost 17%. And continuing to see strong demand for credit. Is this a concerning issue right now?
Yes, the credit is growing quickly. However, if you look over the year of 2012, credit growth that has actually decreased steadily throughout the year, from the mid-20s down to the 17% it is now. We found that most of the credit growth occurred in the corporates, and they've been increasing their overdrafts and other loans and advances quite significantly in December, which maybe indicates that the corporates have decided to opt for short-term unsecured borrowings to help them over the festive season.
That would be worrying. I mean, that's also, an issue here is the growth in unsecured lending, and it has been growing at a faster pace than overall credit supply. Are the regulators looking into how to address this? Is this getting to levels where it could be, proved to be a systemic issue right now?
The feeling we get is that the regulators are concerned about the levels of debt, and they are monitoring the situation. I think we're still within relatively safe boundaries. If you look at the total debt in Namibia, it's still slightly less than GDP, which is much less than many other countries who are currently in trouble. So I think we are okay for now, but the regulators are monitoring the situation.
On the whole, as you say, it's at sustainable levels as it stands right now. Interesting that corporates really hold the bulk, or just looking at the overall bulk of debt sitting with corporates and individuals, and government a lot lower than that. What's your sense as to what corporates are doing with the money? Because, of course, it could be used for productive purposes.
It's difficult to say. By using short-term debt and overdrafts, you'd expect the corporates to be using that for productive purposes, buying stock, working capital, etc. Which, if it becomes overbearing, it can be detrimental to the manufacturers. But I think we'll have to wait and see what the January figures are telling us, and draw conclusions from that.
And when it comes to consumers sitting with around $31.8 billion in Namibian dollars, of course, in debt right now, is there a sense that consumers are over indebted, and the debt to disposable income levels are getting to a stage that could be worrying?
Yes, it is worrying, especially with the low interest rate environment that we have at the moment, which I think once interest rates start going up, there could be a lot of consumers who can find it difficult to covering those liabilities that they've taken out.
James, so your assessments are based on the basic numbers we've seen coming through so far for the end of the year. How does that set the tone for this year, given the fact that we're seeing signals that consumers have got too much debt? We're seeing corporates taking on more debt. Of course, you say not particularly worrying right now, still seeing a slowing in private sector credit extension, and a manufacturing sector that we've seen an improvement in, but not quite to the levels that we saw back in 2011.
I think it all depends on the international environment as well. If there's an uptick in the global economy, we can start seeing improvements in the manufacturing profits and their production, which would help them, in terms of paying back debt or increasing their productive capacity. On the consumer side, again, it also depends on what happens in the economy. We're expecting the economy to grow at more or less the same rate as last year, maybe slightly less, and so maybe we'll start seeing debt levels or debt growth slowing down a bit. The banks also seem to be more cautious in terms of lending to consumers recently, which may help stem that growth.